Hello friends, welcome to Acharya 90 FM, your own radio, myself RJ Tejaswini. In our endeavor to offer education and informative based programs or topics on financial matters, we at Acharya 90 FM have decided to air a series of informative interviews on the various investment products available in the market today for the investable target audience in order to grow their personal wealth. This series will be named as AARTH KARAN and will be having with us on our program Mr. VIRAJ Ramchandra APTE. Mr. Virajji, namaste. Welcome to Acharya 90 FM. Let me first introduce Mr. VIRAJ APTE to you. He is, of course, he has around 16 years and I must say almost 25 years in this industry. From 1989 to 1994, he was working for Guffick Laboratories. Then 1994 to 2000, he was working for Milton Plastics and he launched Aeroline Kitchen Home Products Pan India. From 2000 to 2005, he was the brand manager for SL World Water Kingdom, where you must have all visited Fun Kingdom, which is located, I think, at Lonavala.
No, it's at Jaipur.
It's in Jaipur. Okay, Jaipur. And he was involved in strategy formulation and execution to achieve top line sales and improving bottom line profits for all above brands. From 2005 to current, he is a financial consultant for Ventura Securities Limited franchises owner, and he is handling and managing mutual fund folio of over 200 clients and shares folio of more than 500 clients. So today we have with us Virajji, and he'll be guiding us and he'll be helping us with the information of fixed return instruments. So, sir, first we will directly start with what are the fixed return instruments which are available for investing in our country.
Okay. See, fixed return instruments, as the definition says, the investor gets a fixed return for the amount, for the time period which he has invested. And this return he can get in form of a monthly return or a half yearly return or a quarterly return or after the completion of the year, yearly or cumulative also. Now there are different types of fixed return instruments today available in the marketplace. Most commonly they are the bank deposits. Bank deposits contribute a large chunk of portion because all senior citizens practically invest in banks only because they consider these as the safest instrument. But then if you compare the yield of the instruments which the returns which they offer, they don't offer more than 7% for the common man, and for maybe senior citizens half to 1% more than what they offer for the common man. And they offer from 7 days, as low as 7 days to maybe 5 years also. The tenure is from 7 days to 5 years. And the interest varies with the tenure. See, if you keep for a 7-day period, you may get it at 3% per annum, which is even the same as what you get in the savings account rate. Okay. And of course, all these instruments attract income tax. Income tax is deducted at source. But if the investor puts in 15G or 15H form according to his age, under 60 it is 15G form and over 60 it is 15H form, then the tax is not deducted at source. So he gets the complete interest, and after the year gets over, financial year, he has to file his return and accordingly show the income to the government. But nothing is escaped from the government nowadays. Okay. So this is about the bank returns.
As you said, we have a bank fixed deposit and which gives around 7% of taxable income. So which are the fixed deposit and which are the schemes which bank are offering for us?
See, banks, as I said, they offer from 7 days to 15 days to 1 month, 3 months, 1 year, 2 years, 5 years. But if you compare nowadays, banks, the income which you get is not that attractive because the rate of inflation in our country today is around 4%. And if the bank is giving you 7% return, and if you are getting a sizable income which is deductible by tax, then actually you are not making any money out of it. So it is not a win-win situation per se. And because today our country is in a softer interest loan regime. interest by the RBI to the banks will start reducing maybe from the next cycle.
Okay.
Already one interest rate cut has happened in the last but one RBI interest policy. So from here on, if I will always suggest that if somebody has to really look in for bank deposits, it should be only as a medical emergency amount which he should keep in banks.
Okay.
Because for medical emergency you need to keep minimum 5 lakhs as medical costs have gone up tremendously after COVID in our country.
Yeah. Sure. So you think bank deposits are very attractive nowadays?
They are not so attractive. There are some other instruments which we will talk in our future series, which are more attractive, which actually generate wealth.
How safe it is, like how bank deposits are safer? As you said, most of the senior person, they go for FDs rather than going for share market. So how safe are the FDs?
See, government banks are absolutely safe because they are backed by RBI, the Reserve Bank of India. Okay, but cooperative banks are very vulnerable. I will not name, but there are so many cooperative banks which have gone bust. And they had not returned the monies to the people.
Common.
So what RBI has done, India has also progressed over the years. Financial rules and regulations have changed over the years. The recent rules say that the investor can only secure his rupees 5 lakhs maximum if at all the bank goes bust. So what does it imply? That if somebody wants to keep money in a bank FD, in a cooperative bank, because cooperative banks offer 1% more than what the government banks give. So it is better to keep money below 5 lakhs.
5 lakhs. Okay.
At least they are insured.
Yearly.
But only 5 lakhs, under 5 lakhs in one cooperative bank. Like this, if you have 20 lakhs, then distribute that money in 4 to 5 cooperative banks because they offer 1% more than the government banks. So at least if something happens to the bank, you are sure of the money coming back to you. If the bank goes bust. Maybe not in the proper time, but after waiting for some few years or few months as per the court decisions and all. But money is secured up to 5 lakh rupees only. And in government banks, so you can keep as much as money you want.
You mentioned about corporate fixed savings, so that is also another part. So what are how the corporate bank actually the sector works?
Corporate fixed deposits are typically offered by private companies which are listed on the stock exchange. There are A group companies, I will not name them, but there are some good deposits which are available in the marketplace, which typically give 1% or 2% over and above the bank deposits. Again, the tenure over there is minimum 1 year up to maximum 5 years. And over there also you have an interest which you can get monthly basis also, yearly basis also, quarterly also, and cumulative also. But there the advantage is that since these renowned companies are there and they are existing in our country, they are doing business in the financial sector only for the last 25 to 30 years, they are considered as safe. And that interest rate is only 1 or 2% higher than what the bank deposits are being given.
So I would like to ask a personal question, like it is necessary to investment for a long term period or a short time period we can invest?
See, that depends on your requirement.
Okay.
Now retired people, if they don't have any pension, they will always want to park their monies for the highest interest rate. And the highest interest rate is given for a longer period of time. Let's say 5 years, interest rate is higher than a 1 year interest rate. And a person who doesn't have any pension or any source of income after retirement, he generally parks money for a 5 year period. So that the interest rate does not change even if the RBI declares a lower interest rate. So that is the advantage over there. So it depends on person to person on what he should, where he should invest money or which tenure he should select.
So it depends on, it varies from person to person.
Yes.
So like if a college student, as we are sitting in the college premises, if the college students they open a account, then they plan for FD. So like they are planning for future studies. So what exactly, where they should invest and how they should make the FDs?
Actually, college students typically they don't earn money when they are studying, so they are being supported by their parents only. So when such cases come to us, we normally tell them कि don't invest money in bank deposits. If you have a girl child, then there are different schemes available by the government, like Sukanya Samruddhi Yojana and all. But other than that, the father of the parent, the father of the child should always consider in investing in such instruments which will create wealth over a period of time. Bank deposits don't create wealth.
Okay.
So it is better that they don't select money for a future education and all by keeping money in bank deposits. They should think of some other instruments which create wealth, which we will discuss maybe in our future episodes.
So here we'll take a short break and we'll join again. So in today's AARTH KARAN, we are discussing about the fixed deposit in the bank. So we are discussing with this topic with VIRAJ APTE sir. We'll take a short break and join.
Acharya 90 FM.
Welcome after the short break. You are listening to Acharya 90 FM, your own radio. And today in our AARTH KARAN new segment, we are coming up with new series of this banking related segment, finance related segment with VIRAJ APTE sir. So now we will discuss, I think, about non-convertible debentures. What are they and how to use them?
Okay. Typically, non-convertible debenture, as the name says, that means it cannot be converted into a share in its lifetime.
Okay.
But what is a non-convertible debenture? It is a financial instrument which is issued by a corporate company which acts like an official loan taken by the company from the investor.
Okay.
Okay. So typically non-convertible debenture is given by a company wherein they want loan for their future business prospects. Now non-convertible debentures are issued by public issue basis and particularly a product is available for a minimum period of 1 year or 2 years or 3 years or 5 years and the interest which they pay are for monthly basis, quarterly basis, half yearly basis, yearly basis or cumulative basis. There are so many types of interest or periods where you can receive. Now these debentures are rated by rating agencies such as CARE and ICRA. Okay, and basically whenever a company is floating an NCD, it has to keep security in terms of 50% of the corpus which they are going to raise as a security with the government of India or with the RBI. So this is about the non-convertible debentures.
And how safe are they? Like,
as I said, there are rating agencies which rate these non-convertible debentures issued by corporate companies. Now, normally a rating of AA plus or A plus is supposed to be a safe instrument. When there is a rating which is to the tune of B or B1 or B2, we don't normally prescribe that product to the masses. Only A-rated stocks or only A-rated debentures are supposed to be safe.
Now we'll discuss about tax-free bonds. Which are the tax-free bonds? As soon as the March year-end starts, so people think of tax, how to reduce our tax, what are the tax-free
No,
bonds?
but those which you are asking are totally different set of tax-free bonds.
Okay.
Tax-free bonds currently they are not available. They were available as long as 10-12 years back. Okay. But now they are traded on the stock exchanges. But because the debenture market in India is not so, it has not grown over the past. So not much of volume happens in it. But as you asked me, what are tax-free bonds? Tax-free, as the word says,
Yeah.
there is no tax on
No
income.
taxable. Huh?
There is no tax on income.
Okay.
If you invest in a tax-free bond issue by way of public float,
Yeah.
whenever the issue announces, and these issues are typically given by government-owned companies only, like NTPC or PFC. They were given. Nowadays they are not given because they don't require any funds. And government has also changed policies, and interest rates having come down, these are not too attractive. Only for tax purposes, earlier they were attractive.
Okay.
Nowadays government wants tax from each and every instrument. So these are nowadays not popular. They were once upon a time popular.
Yeah.
But they are available, whenever they were available for a 15-year period. Those issues are still available in the market at a premium.
Okay.
But there is no buyer to it only. Even if suppose if I have invested in these tax-free bonds 10-12 years back and I have to sell it on the exchange, there is no buyer to this. So typically after 15 years I have to return that bond certificate from my demat account to the company, and I get my principal back.
Yeah.
And for the tenure of 15 years I am getting that interest before which I don't have to pay tax. And so they are tax-free bonds.
So now, lastly, to end up, sum up with this podcast, with the first episode of AARTH, KARAN, or saving in banking sector. So one important aspect is public provident fund.
Yes.
So I think you should put more light on public provident fund.
Yes.
Yeah.
See, public provident fund is, according to me, the safest instrument available for a person who wants to keep his hard-earned money, and that too the tenure is 15 years. Plus there is an opportunity to extend for a further number of 5 years. Like this you can keep on extending, maybe maximum for 20 years. And the return over here is basically 7.1% per annum. He is also eligible, the investor who invests money in PPF, they are also able to claim deductions up to 1.5 lakh under section 80C. So all the people who are earning salaries, high net worth individuals, and because the laws have changed now, there are two different laws as per the new taxation rules. That one is the old taxation route and one is the new taxation route. Under the old taxation route, 1.5 lakh rupees you can maximum keep in the entire provident fund issue. So this is the safest product which is available for people who are earning salaries. Other than provident fund, there are so many other instruments, but according to me, this is the safest instrument which is available because it is 100% backed by the government of India.
And we'll discuss lastly about NSC RDs. There are some people, they are recurring deposit. They do their saving in recurring deposits.
National Savings Certificate, as it is called, NSC, is again available through post office. It was a popular product 15-20 years back, and again interest rates were at the higher rate. Nowadays, earlier there was a product called Indira Vikas Patra, which was doubling every 5 years. But as the interest rates started going down, the interest rates on these instruments also have started going down. And now so they are available.
Even that Kisan Vikas
Patra was available. All these products were available when interest rates were to the tune of private corporate companies were offering 10 and 12 and 15 and 20% interest rates on debentures. I'm talking this of 20 years down the line. Nowadays, those high interest rates are just not possible. And going forward also, the interest rate regime will certainly come down till maximum of 5%, because as the country wants to grow and it wants to become the number one country in the world, high interest rates will be a problem for our But if you consider the population of India, since they are all, there are 40% of our population is under 30 and 20% of our population is over 60. That means they are old people, retired people. Senior citizens. So they definitely want certain income for their livelihood. So interest rate regime will not fall drastically in our country as it happens in the Western world. In US, the interest rates are 1 and 2%. We will not fall to that extent. But still, these instruments will be there. Now they are attracted in villages and towns because there the investment culture is still going up nowadays.
I remember lastly I invested 10 years back in Mahila Samman, and now when after 5 or 10 years after the maturity, I went to the post office and asked whether the Mahila Samman is still going on, but they said it is shut
Expired.
down. Why was that so?
Yeah, because it's not affordable. No?
Okay, it was such a good policy.
It was also a very good scheme.
Yeah.
But as the interest rates start coming down, no?
Okay.
All these high interest rates are the products are shunned by the government.
Mhm.
They are stopped by the government.
Thank you so much, sir. Today we discussed in detail with the investment in banking sector. I think this AARTH segment is very fruitful and helpful to the society and our students and whoever our listeners are. Thank you, and I think next time we'll come up with some interesting topic again in following up with this AARTH. Till then, myself Tejaswini taking your leave, and thank you Viraj ji for joining us today on Acharya 90 FM. Thank you. So we both taking your leave for AARTH. See you in the next episode. Till then, keep listening Acharya 90 FM. Thank you.
Thank you.
Acharya